Welcome to Tradespoon. My name is Vlad Karpel. I'm CEO and founder of Tradespoon, and today we're going to have our weekly strategy roundtable discussion where we talk about current market conditions, answer any questions you might have, talk about elections, post-elections, new government, right? Future, potential policies that can impact the market. What to expect in the market short term and long term, and some of the latest trades and trade ideas, right? What works right now, what doesn't. For those of you who are new, welcome. Don, well, good. All right, Andre, Don, Mark, Peter, T, Walt, welcome. For those of you who are new, I'm not sure if anyone is new, but type in yes if any of you are new. I'm not a financial advisor. I'm not registered with FINRA or CC. Basically, my background is technology. I was a CTO or executive in several startups in fintech space here in Chicago. I worked at several brokerages, at several hedge funds. So I have experience in financial industry building technology. And then after some of the companies went public and I decided I'm going to manage my own money, I built a team of financial engineers, started Tradespoon to help me manage my own money, generate signals, and then share the results with the Tradespoon community via subscriptions and via live trading room, right? So you can sign up for these services or you can participate in live trading room and watch trading using these signals. So I've been doing that for over 20 years. Mentoring, kind of also my background. I love teaching. Disclosures are very important. Please read them. Trading stock and options involve risk, not suitable for everyone. You must be aware of the risk and be willing to accept it in order to invest in current market conditions. I'm not a financial advisor. I'm not registered with FINRA or SEC. I'm showing you what I do in my own account based on my own risk tolerance level for general education information purposes only. Please consult your financial advisor prior to making any trading decisions. Also, it should not be assumed that the future trade picks will be profitable or will equal past results. All right. So before we jump into market conditions, let's go into market conditions. Most people here want to see the markets and what to trade, what not to trade. So AMAT is breaking down. Let me just not look good. Let me close my AMAT position. So I was managing AMAT position. So let's look at the yield, right? First, I mean, we had AMAT earnings, right? Down 2 standard deviation was as low as 167, broke through the year-to-date lows or at the year-to-date lows. So pretty bearish pattern. So now the AI theme, I mean, it is alive, and some companies benefit from it. Some companies, don't benefit enough to justify their evaluations, right? So, and this is an example of AMAT. We have NVIDIA earnings next Wednesday, so that will set the tone where the market is going next. 10-year yield continues to grind higher, which is probably negative for the market, right? I do a lot of top to bottom approach. Most investors don't look at the macroeconomic conditions. They don't really care or understand. But I think, from the macro perspective, yields do affect the market. So you need to, you don't have to trade yields, but you need to at least understand if the yields are elevated or if they're not, and where are we going. So we were at 3.6, but now was new, with the elections and the new government, potentially tariffs could go up, which is considered to be an inflationary, and yields, kind of this new election Trump trade maybe started in September. You can see that the yield continues to go higher, and even though CPI and PPI data came in, within expectations, the inflation data is not dropping. interest rates are not dropping. And similar price action in dollar. Dollar also moving vertically higher. This considered to be a headwinds for the market, right? And this is probably one of the reasons. Also with the elections, volatility, expiration this week. We do have jump in VIX. VIX jumped 10% to 15, and spiders are fighting for this open print, right? After the elections results, right? So we had prior to the elections, October high. We broke through the October high after the elections, and now we're, giving up some of these gains. So you can see spiders are down, and QQQ is also broke through the open print of the post elections. Right? So that's QQQ. What else? So we talked about VIX, we talked about QQQ, semiconductors on AMAT, poor results, or not as good as everybody results. Also below 50-day moving, now below 50-day moving average. It's, testing November lows. It already pierced through post-election levels. So that's also considered be bearish. We do have expiration, right? We did talk about this morning gamma exposure on spiders that we really don't really have any positioning. I mean, right now we do have positioning at 590. We broke through the 590 level, but if you remove the expiration, this Friday's data, there's really very little positioning all the way to 570. So that creates kind of this open window that if there is any negative news, then the market could, accelerate its pullback. So you can see it in QQQ, you can see it in spiders, and you can see it in, to a certain effect in small caps, right? Small caps also broke down through the elections open print, and now retesting the breakout level, which is 227. So we're sitting at the important levels. We do have November expiration, which is contributing to the volatility, and we'll just have to see what happens next week. Let's see what else is interesting. ARC Innovation, kind of the same thing, kind of unwinding the elections trade. Metals and miners have been underperforming. Copper pulled back significantly with China, right? China pulled back, copper pulled back, and Europe in general is in strong downtrend, right? August lows. Bitcoin made almost, what was this, the record? 94,000. So it was at 94,000, record high. Giving up some of the gains, but still strong momentum to the upside. There was the idea that Trump and the new government will be beneficiary for the Bitcoin. And then NVIDIA is also pulling back below the open print, or right at the open print of the elections, and in at this important breakout level here, 139. All right. Any questions? Any opinion on semiconductor sector recovery or not? I mean, it's all about NVIDIA earnings, right? Next, I mean, right now, Powell had a speech. Maybe we don't, cut interest rates as aggressively, so there's really no new information, and elections is behind us. We know what the outcome of elections are, some of the policies of the new administration. what is unknown is NVIDIA earnings. And usually, if you look at any earnings, every time NVIDIA has earnings, this is where the market goes, where it may, or usually it's been positive, right? After the election, September earnings, May earnings, February earnings, November earnings, it has been positive. I mean, last year actually, after November earnings, it did pull back a little bit into the, but then it did rally, right? So it did drop, close to 5 or 10%, and only started recovering in December. So market is going to probably follow the NVIDIA earnings, and especially semiconductors, right? I think 30% of semiconductors is NVIDIA. So right now it's vulnerable. It's sitting right at the 200-day moving average. It's retesting October lows, right? It's retesting October lows, 200-day moving average. It's concerning for the market, right? The fact that semiconductors are pulling back, I think, is a concern, but a lot of it, I think, it depends reaction to the NVIDIA earnings. We can look at the gamma exposure in terms of how people are positioning going into the NVIDIA earnings next week. Right, so you have next week expiration and then monthly expiration. So let's remove this guy. Okay. So some people think it's going to be at the $160 level, right? One standard deviation implying 7% move, right? You have pretty large gamma at 160, right? Pretty large position at 160. So some people think it's going to be 160. I mean, you have a large position at 150. On the downside, you do have 140, 135. One standard deviation is an 8% move to the downside is 131, somewhere between 130 and 135 is where I think if it's negative results, NVIDIA could end up, which I think is a 50-day moving average. Sorry, 130, 135. Yeah, 50-day moving average. So it could be a $130 stock. It could be a $160 stock, right? And a lot of it depends on the earnings, right? So that's, I think, what's going to happen next week. Why do I think the Nasdaq is down so much today? The main one of the reasons, I mean, one reason it's overbought, right? Second reason, Powell said that interest rates are not, economy is doing great. We don't need to cut rates as, maybe as aggressively, right? But I don't think that's the news. I think one of the bigger news is that expiration, right? We have we had week expiration on Wednesday, and you can see, right? If you keep November 15 expiration on spiders, you still have positioning at 585, 590. But if and then the total gamma for November, most of the gamma is here in November 15. So all of this gamma disappears, right? We're talking about, well, now it's actually $10 billion and $16 billion, right? So you can see a pretty large gamma that expires in November. And then you have December 20, which is $2 billion, I mean, $3.5 billion. That's what it was in November, right? I think, I'm not sure if this is the right, this is probably due to the expiration, but it was $4 billion yesterday, and now there is $4 billion in December 20. So that is one of the explanations that if I remove this week expiration, then all these bars disappear. That means all the positioning disappears, right? And when the positioning disappears, you don't really have a lot of hedges, right? You don't really have a lot of hedges. So, I mean, there's some at 585, right? That's where we're trading now. There's some at 580, but majority of it disappears, right? You can see these gamma bars are much smaller than they used to be. So this is one of the reasons I think that QQQ is down across the board. Obviously, AMAT earnings also doesn't help, right? It kind of reminds you that, not all semiconductor stocks are benefiting equally from the from the AI. So QQQ, I mean, it broke through the 500 level, right? It broke through the 500 level. I mean, 50-day moving average, so somewhere between 491, right? That the gap here, if we close the elections gap, that would be bearish, right? That's the next step, is for the bears to close the gap. I mean, a lot of it, we just have to see what happens next week, right? Monday, Tuesday, and Wednesday. Any questions on QQQ? All right, so let's start. Let's decide. You know, so we need to decide what to do, right? Do we go all in? Is the market going higher? Is the market going lower, or is it trading sideways, right? So in terms of gamma, so on the outside, we see a lot of overhead resistance at the 605. I think we were looking at 615, right? So the highest position is at 615 strike, right? Really big position at 615 gamma. So on the upside, I mean, we have to clear 600, 605, 610, 615, but the highest position is 615. One standard, let's see, one standard deviation move into December. Now we're talking about end of the year. Basically, 605 level, right? 605, two standard deviation would be 615. So in one case scenario, we can get to 605, 610. On the downside, we could be at 575, right? 570 or 560. I think largest position now is at 560 strike, quite close, 570, 560. So those are the three scenarios that are most likely to occur into the end of the year. One is 570, right? That's October lows, right? You have actually strong support here. So I'd say on one side you have 165. On the other side, you have the recent high 600. So we could be at 615, right? That's one scenario. NVIDIA has strong earnings, retail sales is good, and market continues to grind higher, right? So that's 615 end of the year. The second scenario, we're just trading in the range between 570 and 600. And the third scenario, we break through this multi-month consolidation that broke to the upside, right? Maybe signs of recession, maybe if that doesn't cut interest rates in December, or some other signs that the soft landing, right? The main narrative right now is the soft landing. So the main narrative changes. And we're not in the soft landing, but potentially a recessionary pressure. So how many of you say one, we're going higher, this is just volatility, short-term volatility, market went too fast, it needs to consolidate, but we're going to be at 615, right? Scenario number one. And then scenario number two, no, we're going to be in consolidation. So we're just going to trade between 570 and 600. And scenario three, soft landing narrative is going to be questioned, and we're at historically high multiples for S&P 500, and maybe unemployment ticks up, right? Maybe inflation ticks up, and then we're scenario number three. So how many of you think it's scenario number two? All right, Mark two, Peter two. Anybody else? Andre, Mark, Rick, Ronald, T. Andre two. All right, so most of you said two. I'm gonna go with one. Mainly seasonality, right? Usually, there's underperformance. Some people thought, we're gonna be in recession. So the performance after, like usually into Thanksgiving, November is bullish, right? Usually Thanksgiving and then Christmas rally, then you do have a rally. So I still think maybe not 615, but we're gonna take out the 600, maybe 6.5, 610, 615, somewhere in those levels. I think we'll gravitate toward one. And this is just a short-term pullback. All right, so how do we help on Tradespoon? We do have services today, active trader, right? We have active trader, weekly trader, and monthly trader. Active trader, we have short-term signals. So today we have American Express. The idea is to buy at 288.30, strategy A or strategy B. Previous lows or predicted low. In this case, they're identical. Right, and the idea that you're risking 1% of your portfolio, so which is $3 of the stock price, so $3. So $3 is 285, and the idea is to break it down into two entry points, 286. So if it's down 0.5%, you add, and then if it's down 285, you get out of the trade. So it's a 1% risk. I encourage you to risk, if you're doing day trading, to risk less than 1% of your portfolio, right? So if it's $25,000, it'll be $250, less than $250, 1%. If you hold in position overnight, then 2.5% of your account value. So active trader, that's how it structure your active trader signals. In this example, you're risking 1%. You know, I would risk 1% of your portfolio and then 1% stop loss if you're doing day trading. If you're gonna hold it overnight, then maybe you do 2% stop loss, right? Just a little bit wider. And you can trade stock or you can trade options. If you're more comfortable trading options, if you're looking for the leverage or you want to hedge, we do have basically the same idea, but instead of stock, you would trade options. But the idea is the same, right? It's just instead of 88.80 entering as a stock, you buy 285 call that expires today for $3.30, right? For $3.30. So that would be the active trader. Any questions on the active trader? Weekly trader is similar, right? Weekly trader is similar, is that you have signals, kind of medium to long-term signals. So like RCL is one of the signals this week, right? You enter at 217 or 225, and if it reaches 232, then you exit the position. So those, and then monthly trader, same thing, stock or options. So these are three different models. They analyze different time periods, right? They make predictions for different time periods forward. But those are the signals that I trade in Elite Circle, Premium, right? In Robo Investor. So I don't trade all these signals, but some of the stock signals, then, you know, we have a stock portfolio, that's Robo Investor. We have spread portfolio where I just do option spreads, that's Premium portfolio. And then you have Elite Circle where I do all the trades, right? So today I did AMAT, right? I was trading AMAT earnings. I trimmed Wells Fargo position. Wells Fargo got triggered half of the position. And I added to Texas Instrument, right? I added to Texas Instrument. So you have a combination of stock trade and option trade. Some of them has to do with earnings. Some of them has to do with just market condition. Morgan Stanley, Cisco. So those are some of the trades from this week. So you can go to trade log, you can enter your phone number, or you can enter your phone number in SMS alerts, you'll get a notification, or you can participate in morning bell, closing bell. We have live trading room, the first hour of the trading session, the last hour of the trading session, and we have recordings that you can watch. What are some of the other stocks and themes? So banks, right? Banks continue to do well, right? They're actually not participating in pullback, right? So that's good. So banks continue to be strong, almost at all-time high. Industrials pull back. So industrials did pull back, similar to QQQ. It's fighting for that open print after the elections, but nonetheless, very strong price pattern. And these are your either, you know, General Electric, which is actually getting weaker, or United Airlines, right? Your airline stocks, like United Airline, Delta Airline, up in railroads. Some of the railroads had a strong momentum to the upside after the elections. So that theme still works, right? Industrials, banks, some of the consumer discretionary like Tesla, right? You also have a strong move to the upside, consumer discretionary pulling back. And people are rotating out of the consumer staples, right? They're selling consumer staples, they're selling healthcare stocks, and they are rotating into the industrials and cyclical names, including technology, right? Technology also break out, but it looks like it took out the open print. Any questions? So we talked about Morgan Stanley, right? Some of those financial stocks like JP Morgan, I think is doing well, right? I'm trading Wells Fargo. So JP Morgan is at all-time high. Wells Fargo is breaking out at all-time high. Brokerages like Morgan Stanley, like investment banking or BK, Bank of New York, continues to accelerate. That does well. Credit cards, Visa, Synchrony Financial today. You can see these are the stocks that are also in strong uptrend, cyclicals. What doesn't work right now? Well, Bitcoin. Bitcoin is one of the best performing asset classes as well. Copper is under pressure, right? You have FCX is under pressure. You have China under pressure, and you also have Europe under pressure. And again, United States will have hard time. U.S. markets in the United States will have hard time continue to go higher if Europe is in recession or if China is, not growing. So it could be over exaggeration to the, new administration, right? Or it could be that they are in, there are signs of recessionary pressures in Europe and China, and at some point they might translate into the United States. But from seasonality point of view, usually November, December is strong time of the year from seasonality point of view, but obviously it could change, right? Just because of the seasonality you have strong trends, you just need, if there's some kind of news in the market, then you could have a bigger pullbacks. All right, any questions? Elections hard. So, all right, great, Peter. All right, if there's no other questions, then that's all I have for today. You guys were awesome. Thank you very much. Have a great day, and I will see you hopefully in the live trading room at the closing bell. Keith will do that, or Monday morning. Thank you.